We're back at it again, Daniel. If you've been paying attention to the turmoil that is my life, particularly my trading accounts over the past week, I was so incredibly grateful that the weekend came when it did, to use the time to just get a little bit of rest, relaxation, and let something deep in my soul just kind of calm down. But yes, we were able to take a little bit of a breather, and we're back doing what we do best, letting you guys know what to pay attention to this upcoming trading week. There's one major thing I want to focus on. I know there's a lot of people, I'm seeing it all over the internet, calling this last Friday the low, and it's time to buy the dip. And I want to break down how I don't agree with that whatsoever. And more importantly, I actually want to call out a time period where I actually think we're going to see a dip that is worthwhile to be bought. So that's going to be the major focus. I hope that sounds good to you. As always, I appreciate your time. I appreciate your good vibes. Don't forget to like, don't forget to subscribe. And with that being said, let's rock. Now, to have a better understanding of where we're most likely going, you kind of have to have an understanding of where we've recently been. So when the world's largest casino officially closed on Friday, here was the headline. S&P 500 closes higher in volatile trading Friday, but index posts worst week since September. If you were watching it, it was a crazy V-shaped recovery. What we had was basically a sell-off until around 11:45, around 12:15, and then a pump where we actually took out the intraday high, obviously closed slightly green on the day. The SPY was up 0.6%, the Qs were up 0.75%. Decent recovery. We bled off a little bit after the pit session actually closed, but what this was really, if you saw the options market, we were in a very negative gamma situation. So as the market started to pop, you had all these market makers unwinding their own short position. So basically it became a lot of positive momentum. It was a positive feedback loop, and we got that pump. And because there was a little bit of green intraday, there was a lot of people excited that, oh, okay, this might be the dip. And I'm seeing it all over. And I truly believe this is a fluke, and it's still slightly too early to be calling for a dip. Now, one of the things I want to talk about is over the weekend, right now, you can see Bitcoin's actually been getting hit pretty considerably. Friday, it was around 87,000. We're currently trading at 82. By the time you're watching this, it might even be worse off. And this all has to do with a lackluster crypto summit. First ever White House crypto summit leaves some investors unhappy. The price of Bitcoin failed to rally as the summit, hosted by the crypto czar, Mr. David Sachs, concluded. And like I said, at that point, it was around 87,000. So it's even worse off now. The White House hosted its first ever crypto summit Friday, convening top executives from various digital asset firms to discuss the Trump administration's commitment to rolling back the aggressive regulatory posture that Biden administration took toward the industry. However, some in the crypto world were left disappointed that the Trump administration did not signal more active support for the industry, leading the prices of the very assets the summit was supposed to claim to sag Friday. And like I said, it dropped down 7%. At that point, it was 87,000. As you can see here, we're a little bit worse off. Side note, I actually kind of anticipated this just because recently, whenever we get these crypto news events, nothing's ever really been delivered. So I ended up getting some MSTR puts. So based on where we close at, seeing what's going on with crypto now, I think there's going to be a nice little gap down there. This is actually the position I'm currently playing, MSTR 240 puts, expiration March 21st. Obviously, if you're interested in these real-time call-out trades, I mean, it ended up being nice. It's up about 18%. It's going to be up most likely more when the market opens. So if you're interested in this in real time, that's exactly what the Goonie Trading Discord is for. Not only do you get my signals, there's a lot of private lectures, and it's just a community of great like-minded traders where you guys could all help each other out. I know they're definitely always helping me. So I recommend checking that out. And the first month is 100% free. Just make sure to use that code Goonie. Anyway, kind of bringing it back, this is the first thing I'm looking at. I was like, okay, over the weekend, we have a little bit of weakness in the crypto sphere, but I want to talk about the SPY and the Qs and why I don't think the bottom's really in. So the first thing we need to chit chat about is seasonality. Right here, you have the seasonality of the S&P 500 futures market over the past 3 decades, and you can see about halfway through March, that's where the bearishness seemingly subsides, and then we kind of pump all the way till the end of April. So I see a lot of people talking about that and saying, whoa, is it honestly that simple? Are we bouncing off the 200-day moving average? Is it going to be, there's no way it could be that simple, right? And I really don't think it's going to be that simple. So another way we could look at seasonality is from Edgeful, and instead of the last 30 years worth of data, this is the last 5. And if you look at the monthly, yes, you could see historically over the past 5 years, March does slightly favor the bulls. But if you go to the weekly, you'll actually realize that the next 2 weeks are gonna be bearish. So it's because of this week 3 weeks out that it becomes net bullish. But right here, what we're seeing, at least over the past 5 years worth of data, it does not pay to be a bull at this period in time. So I just want to give you the basic seasonality. That's not the end all be all, but it just does give you a good idea of the headwinds and the tailwinds. So what could impact it this upcoming week? Well, we do have some things related to not only the overall economy, but specifically going to be impactful on monetary policy. On Tuesday, we have the JOLTS job openings. On Wednesday, we have a very important inflation report, the Consumer Price Index. On Thursday, not only do we have the initial jobless claims, but we have the PPI report, the Producer Price Index. So the name of the game for this upcoming week is paying attention to these data drops, because clearly it's going to have an impact on most likely what the Fed's going to do. And as the market tries to interpret what the Fed's going to do, their traders are going to be like placing their bets. I think that one's pretty obvious. Right now, the most recent ones have been coming in a little bit hot. We know unemployment's coming in a little bit hot. So if we're kind of running those numbers back, that's not going to be so good. I also want to remind you, earnings season is basically over, but there's still a couple ones you might want to pay attention to. Oracle is coming out on Monday. You have Kohrs and Dix. You have Adobe. You have DocuSign, Ulta Beauty. So it's not like the biggest companies, but I know in chat that some of you guys are watching these. So feel free to screenshot this. I just want to put that out there. I should also let you know that this is 100% free. This newsletter comes to your email inbox every single Sunday. All that information I just went over is in here. Once again, 100% free. I break down the previous week, let you know what to look forward to the upcoming week, all the earnings. I try to highlight the ones that I think you're going to care about the most. Obviously, I give you a little cheat sheet of all the major macroeconomic events, and then I give you the seasonality for each individual day, which in reality is another piece of information of why I don't think that what we saw on Friday is actually the dip. So first of all, there is statistics and a general market sentiment that markets do not bottom on a Friday. If you look at the data over the past 10, 20, 30 years, that's generically true. Of course, you're going to be able to find some counterexamples, but the odds really do not suggest that we bottom on a Friday. Also, I want to pair together that not only do we know the next upcoming 2 weeks are historically bearish weeks, but look at Monday itself. Over the past 27 years, we're just really seeing that it was kind of nothing. And then over the past about 6 to 7 years, the bears have just started to be absolutely dominant. So I wanted to share that. Tuesday is a bit more bullish. Wednesday's a bit more bearish. Thursday's a bit more bearish. And then Friday's a little bit more bullish. So it's this like kind of classic ping pong that we've really been seeing in the overall market anyway. I mean, look at this. Red day, green day, red day, green day, red day. This is the only time we actually had two of the same color on back-to-back days. Then red, then green, then red, then green. This has been a very, very difficult, high volatility ping pong market. And we're now at the point where people are saying, okay, we are kind of on SPY, the ETF tracking the overall market. It looks as if maybe we bounce off the 200 moving day average. I see a lot of people talking about that. I see a lot of people saying, oh, okay, like we just had this giant wick through the lows that we saw in early November of 2024. Maybe that is it. And of course, that might be true. But for those of you who pay attention to the stream, shameless plug, Monday to Friday, 9 to 11, you can see me degenerately trading my account. We've done a lot of talk about what's going on in the options market. Now, what you need to know, not only for Monday, but for the upcoming week and really the entire option change, right now it is put dominated. Generally not the best sign to try to just be randomly buying a dip when it's put dominated. You can look at all the open interest you want, and you're going to quickly realize that we are in a put dominated negative gamma environment. With that, of course, it is some of the ingredients that you need for the recipe of a Vanna rally. We've done many videos explaining what that is, so feel free to check those out. If these puts start to come off the table and we get a little bit more call dominated and VIX starts to collapse, yeah, we could see a huge pop. But right now, we would have to see it. If anything, what I'm actually seeing is there are many, many bets for this upcoming week around 5,700, which is pretty much that low from November. If you need a rough level on the SPY, I don't know, around 567, 568 would be like roughly the equivalent, but the big bets are at 5,700. That is the major strike being played, and obviously it is dominated by puts. So If we see that snap, it's kind of a situation of look out below. Right now, we're just not seeing the optimism. And really, when you start to do more of an additional breakdown, like more of like an intensive breakdown of the option chain, as of the moment that I'm filming this, it is suggestive that we're going to get a bounce, but most likely it's going to be coming somewhere between March OPEX, which is going to be the 21st, and somewhere in early April. So basically, we're saying the end of March, either OPEX up to early April, somewhere in that 1.5 week period might be coming because of OPEX. Maybe the major players end up waiting for the start of April, but it's somewhere near late March, early April, where I'm personally going to be looking for that major dip buying opportunity, just because that's what we're seeing in the options market. It does somewhat align with seasonality. And in all reality, I'm hoping at that point, that's where we see the actual Vanna rally and all those puts get taken off the table, and then we see that nice pop forward. So right now I'm seeing a lot of rhetoric of Friday's the low, and it doesn't agree with seasonality, it doesn't agree with the options chain, and it also doesn't agree with just general statistics of we don't commonly bottom on a Friday. Now, when I'm saying this, remember, none of this is guaranteed. We're just talking about the highest probability pathways for the market forward. Nothing's ever etched in stone. And what I like to do is look for the highest probability and get in on the lowest risk situation. So I wanted to share that with all of you. I wanted to share what's coming up for the week, not only in terms of seasonality, but also earnings and also the major macroeconomic events. And throughout the week, as I give you the update videos, I'll keep you apprised to any of the situations of major changes in the option structure. But right now, this is just not that supportive. Of course, you could get bear market rallies like a 1, 2, 3 day huge push. But in terms of a strong bullish foundation, it is simply not there at this moment in time. But it does get a little bit interesting. Once again, feel free to clip this, feel free to come back to the video. My personal prediction is somewhere between March OPEX, the start of April. I think that's where things get really juicy for the dip buy. I appreciate all the vibes. I appreciate all your time. I will catch you in the live stream. I'll catch you in the next update video. Best of luck. I'll catch you later. Peace.